What's up you guys, my name is Michael Tandarich and welcome back to my YouTube channel. If this is your first time on my YouTube channel, basically I talk about business and personal finance. Now one of the things that has been really popping off recently is educating yourself on investments. I think basically the millennial generation kind of grew up on their parents, doing stock trading within Vanguard or like Charles Schwab or something like that. That seems like super intense, and your parents talked about stocks, your grandparents talked about stocks, and you're like, whoo, way over your head. However, with the dawn of things like Public and Robinhood and Webull, it has made investing in stocks ridiculously easy for our generation. Almost actually made it into like a casino type feel where you're almost gambling in stocks instead of actually investing your hard-earned money into something that's going to give you a return. But that being said, I actually wanted to make an entire video on some top things that you can invest into and what those things are, explaining those things a little better. When I first started investing, sadly very recently, I had no idea what any of these things meant. Things like bonds, mutual funds, REITs, dividends, none of it. I had no idea. Someone came up to me and was like, hey, why don't you put your money into a CD? And it's like, what? I can put it into a CD? And then put it into my radio player and listen to it? Honestly, I feel really, really, really old for making that joke because CDs aren't even a thing anymore. Heck, I remember tape recorders. Do you remember tape recorders? Anyhow, I wanted to make this video for someone like myself a little while ago that was interested in investing my money that I had made through my business or through working hard, but I had no idea what I could invest it into or what these words even meant, things like mutual funds, bonds, blah, blah, blah. So let's go over a couple different investment options for you and what each one of these things mean. Also, because I'm a complete nerd and grew up on Pokemon, I am gonna relate every single one of these things to a Pokemon. I feel like it's gonna make it a little bit more fun, a little more interesting, and I get to talk about Pokemon, which was one of my favorite pastimes when I was younger. Also, comment below if you were ever into Pokemon. Anyhow, let's just jump into it. First off, I am not a financial advisor. This is not a financial advice. This is just me sitting in my garage talking about investment options and Pokemon, and that's it. If you like investment advice, please talk to a professional financial advisor. So when it comes to investments, think of it like this. Each one of the investments that you make is a Pokemon, right? So like Pikachu or Snorlax or something like that. And all the Pokemon that you have on your team or your Pokedex, I realize the Pokedex is more of something that is your kind of checklist of all the Pokemon that you have seen, but I mean more like when you have all 6 of your Pokeballs and that's your team that you walk around with. I think that's just called your team, but we're just gonna go with team instead of Pokedex. Your team is basically your investment portfolio, and each one of your investments is basically a Pokemon that you get to carry on your team. Also, if you've ever played Pokemon, you also know that each one of your Pokemon have different types. So like fire type, water type, grass type, poison, all that stuff. And each one of them provide a different aspect or a different ability against the other type. And the reason I'm bringing this up is basically every single Pokemon that you have in your portfolio is going to do a different thing. So each one of your investments is going to do a different thing. And you don't want to have an entire team that's all just fire and that's it, because you can just get crushed by someone else that has water or rock on their team. Basically, you want to have your entire team or your portfolio be diversified enough to be able to be strong against, well, you're not fighting against other teams, but you want your portfolio to be strong, is I guess my point. Okay, so that being said, let's get into the first investment. So the first one is stocks. And I'm gonna relate this to Pikachu. Obviously, we all love Pikachu, so I'm just gonna relate it to Pikachu. And basically, with stocks, you're owning a portion of a company. Now, this little portion is called a share. So every time you go and invest in a stock, you're getting a portion of that company, and it's one share. So for example, let's say a stock has $50 per share, right? And you buy 50 of those shares for $50. That means you invested $2,500 in 50 shares of that company. Now what's great about this is by buying a stock, you can basically increase your money if the company does well, or you could decrease your money if the company doesn't do well. Now there's a bunch of different type of stocks in the stock category, and I'm not gonna go into that in this video, but basically all you need to know is that stocks are a slice or a little portion of a company. Now investing in stocks is obviously very popular, like Pikachu is. However, if you pick the right stock, you can go really, really high. If you pick the wrong stock, you can go really, really low. So it's like Pikachu too, where you put it in the battle and sometimes it's really great and other times it's really Pikachu stocks. Now, the main reason companies have stocks or have an IPO is basically they take the money that you invest into the company and use it to fuel their growth in the future. Obviously, every single company wants to be successful and everyone wants to make money off of companies. However, it all really comes down to the positive or negative growth of a company. So, like I said, I'm not going to go into all the details of every single type of stock, but just know in the category of stocks, you can purchase a slice of a company and make some money. Now, if you want to invest in stocks, getting an app like Robinhood or Webull or Publix is a great start. And you can get a free stock on each one of those platforms when you sign up by using the link in the description. So make sure to do that. It's free money. You might as well do it. Okay, so the next investment that you can make is into mutual funds. And I'm going to relate this to the Pokemon Magneton. And here's why. Basically, a mutual fund is a combination of stocks, bonds, and other securities. So it looks like 3 different Pokemon or a bunch of different Pokemon that combine it into one, and you can invest into this mutual fund to basically get a small slice of stocks, of bonds, securities, etc. Now, the whole purpose of having a mutual fund is basically you're trying to outperform the market. So basically, a mutual fund is operated by professional money managers, and the whole goal is they take the money that you put into it and they aim to produce capital gains off of, like I said, investing in those stocks, bonds, and other securities. So, like Magneton, basically you get one Pokemon, but in that one Pokemon, you get a bunch of different Pokemons in that. Granted, you're not going to see super high returns like you would if you just invested in certain stocks, but they're not as risky as stocks. So yes, you might not get as high as return, but you might not get that huge loss if you just invest in stocks solely. But basically, a mutual fund is managed by money managers that take the money, put it into stocks and securities with the goal of outperforming something like the S&P 500, which is basically just the stock market. So if you want to own a slice of a bunch of different companies and have someone else really just managing it and get an average rate of return on your investment, mutual funds is probably a good option for you. Okay, the next investment you can make is in index funds or ETFs. Now, the Pokemon I'm going to use for this is Eggs Execute. I think that's how it's said. But basically, it's very similar to mutual funds where basically you get one Pokemon, but there's a bunch of Pokemon in that Pokemon. But unlike mutual funds that try to outperform the market, index funds seek to basically have average market returns. So basically trying to keep with the S&P 500. Again, you're basically buying the index fund, but in that index fund, you get to own a slice of stocks, bonds, other securities, those kind of things, depending on which index fund you invest in. But like I said, the big difference is mutual funds try to outperform the market while index funds basically stick with the market. Now, if you want to invest in index funds, a great one that I like is VTI. So that's the Vanguard Total Stock Index Fund. If you have Robinhood or Webull or Publix, you can actually invest in that index fund. There's a couple other ones like VOO, which is another index fund provided by Vanguard. And like I said, you're not going to see ridiculous returns, but in the past 4 weeks, I've seen a 10% return on my investment into it. And to me, that I'm good with that. Long term, it's going to make me a lot of money. It's not a quick make money thing like some stocks can be, like AMC or GameStop, but I have that in my Roth IRA right now. And so I guess you could say I have an Eggs Execute in my Pokedex or on my team. That's a better way of saying it. God, I'm so weird for trying to like correlate Pokemon with stocks, but yeah, if you don't subscribe, I don't really blame you. Okay, the next investment opportunity for you is bonds. I'm gonna correlate this one to Snorlax. Everyone loves Snorlax, everyone talks about Snorlax, but when it really comes to it, Snorlax really isn't that great when it comes to battle. And that's basically what bonds are right now. Now, a bond is not like stocks where you're owning a portion of a company, but a bond is basically a loan that you give out to a business or the government. And basically this bond or this loan has an interest payment on it. So for example, let's say you have a bond for $2,500 and it has a 2% interest payment on that $2,500 bond that you got. So basically that 2% annual interest will give you $50 every single year. However, basically where bonds are right now is they don't really give you that great of a return. A 2% return on your money is very, very, very low. Like I said, you can get an index fund, you can get stocks, you can get a mutual fund, and that will be a way higher return than 2%. Also, because it's a loan, you can't really pull your money out. Once you put it in the bond, it's done until the end where you get your money back and they pay it back in full. Because like I said, it's basically a loan to a company or the government. The other thing too is if you're getting a return of 2% of interest on your loan or your bond, you're basically still losing money. Because of this thing called inflation, where basically every single year the value of the dollar goes down by a percentage. Now the average inflation rate is kind of hovered between like 2 and 3% every single year. However, it's looking like it's going to go a lot higher since we printed so much money over the last year because of the whole, pandemic. So basically, inflation is going to go through the roof. So the value of the dollar is going to be tanking. So investing in something like a bond is still going to mean that you're going to lose money. Okay, so the next investment opportunity for you is a CD. And basically, I'm going to call this Wobbuffet. It's a completely useless Pokemon in my opinion, and that's basically what a CD is. So basically, a CD is a certification of deposit into a bank account, and basically it's saying that you are going to put this money into a bank account and not touch it for a certain period of time. And basically the bank gets to then use that money for certain things. And by doing that, you get an average rate of return back, so you get some money back or interest on that money that you leave in the bank account. However, that amount is extremely, extremely low. So for example, if you leave money in a CD for 1 year, the average rate of return is 0.17%. If you leave it in for 5 years, the average rate of return is 0.31%. So going back to the past example with bonds, you're going to be losing money because of inflation. So having a CD is basically like having a Wobbuffet on your team. It is completely pointless. Okay, so the next investment opportunity for you is called dividend stock. Now, like I said, I know I wasn't going to go too deep into the different types of stocks, but I wanted to speak specifically on dividend stocks. Now, dividend stocks are something like a poison type Pokemon, so like Venusaur, for example. So basically when you invest in a dividend stock, you're going to make a certain amount of money off of that stock if it goes up. And then every single year, because you're holding that stock, they're going to give you a dividend yield, which is a certain percentage of the share of that stock that you're holding. So the reason I correlate this to something like Venusaur, basically you can attack, which is like investing in your stock. But if you remember, certain poison attacks also continued attacking your opponent with the poison every single move. And you didn't have to actually continue hitting them with another attack if you didn't want to, and they would still get attacked by that poison. So not only are you attacking them, but then they're also getting attacked by the poison. God, man, the correlation I'm trying to make with these stocks and Pokemon is just kind of pathetic. Anyhow, the point is you invest in that stock, which is your attack, and then you get a dividend yield, which is basically the poison attack. So you get to make money off the stock, and then you get to make money off the dividend yield. A lot of people really like doing dividend stocks because it can be a passive way of making money. However, you have to invest hundreds of thousands of dollars in order to actually make it passive income money that you can live off. But to give you the example, I'm going to use Chevron as one. So their stock is 106 right now, and over the last year it has gone up. The whole year it's gone up about 20%. So you make 20% on your money. So if you invested $88 at the beginning of the year or last year, then it would be at 106 right now. So, and then when you look down here, the dividend yield is at 4.91%. So basically for every share you'll get roughly $4 or 4% of that share. Now companies can go and change this at any time, so you're not exactly going to get 4% every single time. Some of them keep them that way, some of them move them up, some of them move them down. But point is you can invest in a stock and then get a dividend yield at the end of the year. Okay, the next investment is REITs. So I'm gonna actually correlate this one to Larvitar, and you'll see why later. But basically REITs are mutual funds or index funds. But instead of actually investing in stocks or bonds or something like that, these companies invest in real estate. So there are some REITs that specifically invest in medical buildings or commercial buildings or multi-units, and you can go and invest your money into those REITs and get a percentage back. Now this is a good way to actually say that you can invest in real estate without having to do the property management, finding the property, doing any of that stuff. Obviously there's downsides to it, but it's a good way to get your money into something that's a little bit more consistent. Okay, the next investment opportunity for you is actually real estate. And I'm actually gonna use Tyranitar for this because this is the evolved version of Larvitar. And the reason I'm using this one, as dorky as it sounds, is basically with REITs, it's like you're investing in real estate, but you're actually really not. But when you go and invest in real estate, basically there are a bunch of ways that you can make money with your investment here. You can do flipping properties where you purchase a property that's beat up, fix it up, and then sell it for more. Or you could do something like multi-units where you can go and purchase a property, fix it up a bit, refinance it if you want to, and get renters in there. And then every single month, those renters pay you money to live there. And then basically the loan that you put on the property is getting paid down. And then you're also taking some cash off the top too. And then there's also things like short-term rentals or wholesaling and stuff like that. I personally really like real estate investing. I'm actually working on closing on a triplex right now, which once we get everything going, hopefully we'll be seeing a return on my investment of about 20%. So taking all these investments that we're looking at, to take something that you're getting 20% return on investment on is absolutely crazy. I've seen people get higher numbers on that. But if you want to get a higher return on your investment, I would highly suggest getting into real estate, which is, like I said, it's just a great way to make money. I also feel like humans are forever going to need a place to stay, food to eat, and healthcare. And so if you get into any one of those industries, it's going to be very lucrative for you, especially in the long run. So if you're going to be investing your money into something, I would highly suggest doing it into real estate. Okay, so that's basically it. Thank you for sticking with me with the correlation of investments in Pokemon. Obviously, research a little bit more about every single one of these investments and then figure out which Pokemon that you want or investments on your team or your portfolio. Having a well-balanced portfolio is going to help you more in the long run. Have some things that are higher risk that can bring in some money, but more consistent stuff that is going to bring you money on a consistent basis long term. So mixing in some high volatile stocks with some good mutual funds with some real estate is going to make your investment portfolio very strong to get you to whatever financial goals that you have. Again, if you want a free stock from Robinhood or Webull or Public, click the link below and you get a free stock by signing up with those platforms. Again, if you haven't done it already, it's free money. You might as well. Also, if you enjoyed this video, I would greatly appreciate it if you subscribed. I'm trying to get to 1,000 subscribers, and YouTube gets it out to more people if I get to 1,000 subscribers. So, thank you for taking the time to watch the video, and I will see you in the next one.